It's a new trading month and the same themes do permeate today. We're seeing the major stock averages off by about 1% and the VIX up by 36%. So joining me today is Stephen Guilfoyle of Sarge 986, and we'll talk about fundamentals globally as well as nationally. Sarge, great to have you here today.
Thank you for having me, Remy.
Well, as we return from the Labor Day holiday, we have a lot to talk about in terms of global market action. Of course, geopolitics are taking front and center stage as North Korea continues to threaten the Western powers. But in terms of sectors, which I want to start out with, we're seeing financials lower today. So has your outlook changed on any of the sectors?
It's so long since I spoke to you. I'm not sure what I told you last time, but yes, if you haven't started rotating out of financials, it may be a little late to do so. You might want to wait for a pop. If you haven't already gotten involved in the defense names, I think you should have seen this one coming.
Sure.
But like myself, I like Lockheed, I like Raytheon, I like Kratos Defense. I've been in those for quite some time. It's probably not too late. You probably still have upside there because North Korea remains such an uncertainty. Global terrorism isn't going away anytime soon. So even if you don't catch the dip on those, I think everyone needs to have defense stocks in their portfolio going forward, probably indefinitely.
And historically, September is known as being a volatile month, and we're doing a great job in today's session seeing volatility. But there are a lot risks in terms of geopolitics as well as nationally. When we look at geopolitics, of course, we're thinking about North Korea, but we also have the German elections. And here in the US, we have tax reform as well as healthcare reform, and of course the debt ceiling coming up at the end of this month. So how are you factoring that into your overall strategy?
All right, the big deal right now is the budget and the debt ceiling. And those are temporary, I believe. All right. Then you move on to tax cuts. I don't care if it's tax reform or not, but I do care about tax cuts. Those I want to see. I do believe we will eventually see that. I think we might see it this year. So what you have now, you're going to have a shaky September, maybe even into October, but a shaky September because of what I just said, and you have a spring that's being compressed. Now, at some point, that spring's either going to break or it's going to pop the other way. And that's going to depend on tax reform. If we get the tax reform we're looking for, the nice tax cuts, 15% corporate, maybe some repatriation, something like that, you're going to see numbers approaching 2,600 on the S&P 500, just on the euphoria that follows. However, a Fibonacci retracement from the high of 2017, a 38.2% retracement, would bring us down to about 2336 on the S&P, which is where that spring would either break or pop. So it's uncertain right now, but I do believe that the move will ultimately be to the upside.
And I do want to bring our focus back to the sectors. I do want to get your take on technology. Now, when it comes to the FANG stocks, in terms of September, we do have an announcement coming out from Apple, which is on September 12th, and that will be in the spotlight for investors as well as consumers alike. But where do you stand in terms of technology?
I really like the semiconductors. They're taking some of them are taking a little bit of beating today. I really like NVIDIA going forward. I think they're involved in every pertinent technology business going forward. I think it's down $4 or $5 today, but that's all right. NVIDIA could be down $20 and it wouldn't concern me because I think that the move there is higher. I like Intel for the dividend and for other reasons such as their movement into autonomous driving, which seems to be going fairly well. As far as FANG, I like Apple. I think Apple's the greatest consumer name probably in history. I am long the stock. I'm out of Amazon completely right now. I look at that I'll be in and out of it many times between now and the next time we speak, but that's simply just a trading vehicle for me. I don't look at it as an investment. I do like Google going forward because of their marriage with Walmart. I'm a big Walmart fan, and I do believe that that is probably going to develop into a formidable opponent for the likes of Amazon, which is why I'm no longer long Amazon.
I do want to get your take on the insurers. Hurricane season is here. We have Hurricane Irma in the Atlantic right now, followed by Hurricane Jose. So what do you make of what we're seeing in the insurers?
Well, they're certainly at risk. And I guess because there wasn't such a wind factor in the last storm, that they're not going to take the hit that people first thought they would, which also means they won't be able to raise prices, which usually ends up being a positive for them in the long run, like people thought. Now, obviously, we have a couple more storms to go. Let's hope these storms miss the United States. Let's hope they miss all people living everywhere. But I mean, it really, as far as the insurers, that's a hard play because you just don't know. There's going to be immediate contraction. Then, depending on how they're able to raise prices, it might be a long-term investment. I like buying things like Owens Corning, Weyerhaeuser, lumber, roofing material, things like that. These are two stocks that have done very well since the storm because these are the kind of companies that make the things that people need when they rebuild. So that's a way to play it without playing on people's fortunes.
Okay, well, Sarge, thank you so much for joining me at the beginning of the week, and thanks for all your insight as always.
You're welcome, Remy.
Thank you.